All right, welcome to another video. Today we're going to take a look at American Express. The stock is currently gaining after earnings, and that's what we're going to check out and talk about. Keep in mind, these are just my own personal opinions and insights as we check out the stock. Right now, it just released some recent earnings. So, fourth quarter earnings report shows record consumer credit card spending. Yay, more people are spending money. So that's great. So shares go up, but that's not necessarily the reason, right? Earnings can be great and the stock tumbles. Earnings can be great and the stock goes higher. So it really, this is what the news is tying it to, but the reality is it just relative to more buyers than sellers. That's all it comes down to. It has very minimal impact, but yes, of course, some people will buy into things because of the earnings are great. So everybody has a different reason. All right, as we check out the stock is powering up quite a bit. We're looking at about 8% up for the day. So the stock is moving well, the volume's picking up speed, but it's possible that the stock was just undervalued at $155. This is kind of what we're looking at where our support is. So when we check this out on the weekly or monthly, remember, it all comes down to, are you a long-term investor, medium-term, short-term investor, right? If you're looking for being a longer-term investor, the stock is quite high, right? At the upper end of 200, but it does continue to kind of move in this trend line to the upside. So back in its inceptions in the 80s here, or the IPO, the stock has continued to trend fairly well, and it's kind of moving this trend. Yes, we did have some issues here right around, was it 2008, 2009, where the stock pulled back along with many other stocks. And that's where we kind of got into the highs of the 60s, and then the stock pulled back. And then we came back up, broke through that price level, and then came back to retest it, held that. And that's kind of what we're doing now. So let's zoom in onto that area. And remember, think of yourself here. Are you more looking for this as a long-term play or a shorter-term play? So as we look into this, we are at that higher upper band or upper level. So I'd say one level of critical support is right here under that 150. That price level is going to be 140. Okay, that is one level that you want to watch. If this stock does continue to pull back from the highs, that could be an issue. For now, though, the stock is powering higher. That's what the earnings are telling us. And one of the key support levels that we've had was this one. Okay, you can see the swing points kind of lining up. This comes into March of 2021, where that stock is basically moving sideways. So look at this. This is just a sideways movement that we've had since about March. So almost a full year now, where we've been stuck in this range between about 185 and about 150. Okay, so that stock is just kind of wiggling and isolating. So as you look at the value, that 150 is kind of the better value buying spot. And as you look into the 180, that's kind of the selling point. Until it breaks past those levels, you're going to be stuck in this trend and range. So right now, where are you in this range? You're kind of right in the middle. Earnings are pushing the stock higher, but again, you're going to go back into about 180 here soon, and you're going to have some overhead supply, and that's going to be a little bit of an issue. So here we are at the upper range, right, of that stock. So in other case, if you're a shorter term trader or investor, be careful buying at these levels. Normally you want to buy on dips, right? Or buying right here at these lower ends. But in this case, you're kind of buying at the upper end and upper level. So I'd kind of wait for a pullback or something, especially with stocks that are up. Any stock that's up usually 10% or more, you just want to stay back just for a day or two. Just see how it evolves, because what you might get is a pop higher and then a pullback very quickly. It's called fading the gap. So you can see here as an example for you, Taiwan Semiconductors, TSM, released earnings not too long ago. Stock popped, faded back, right? It's called a gap and fade. That's what the professionals do, is when the stock over pops or over kind of moves to past a certain expected move, they expect it over the next few weeks to kind of pull back. And that's what happened here with Taiwan Semiconductors. And it happens with a lot of stocks. So as we look at American Express, I'm not saying that's going to happen. I'm just saying be careful that you don't get sucked in because one day doesn't make a trend. It could be a lot of euphoria right here at the beginning. Like the first day, it's like, oh man, things look great. And then all of a sudden later on, once we get to a certain level here at about 175, this thing could just roll over to come back and retest certain other lower levels. So in either case, long story short, we're kind of in the sideways range here in the stock. You're kind of getting into that upper range. Don't be a chaser. If you're looking to get into the stock, don't chase it. and looking to buy at support around 150, 155 is kind of a good buying value dip on the shorter term. On the longer term scale, as we looked at it, you're kind of at that upper level. So pullbacks could happen, absolutely. And definitely like stuff at around 100 could be a really good value buy, but that's like if things really get nasty. So don't want to scare you on it, just sharing some insight here for the longer term perspective. So anyway, that's kind of my thoughts and tidbits. Hope you enjoyed it. Thanks for joining me. Enjoy the rest of the week ahead, and I will see you next time.